defending the free market, and making the moral case for capitalism. The Justin Moore Show. Hey everybody, welcome to the Justin Moore Show, where we make sense of what's going on in this crazy, insane, out of control world. Now, ladies and gentlemen, oh my gosh, it's the holiday season. Christmas is just around the corner. We got crazy stuff going on in the economy. Of course, last week we had, the FOMC and the Federal Reserve, Janet Yellen. They announced we're going to raise interest rates. And I called that, well, I don't want to say I told you so. I mean, I'm sure a lot of you listening too, you're like, yeah, the Fed is going to raise interest rates. It was a pretty obvious call just from where they were headed. And I think I predicted back actually on my show, was that like July? I'm like, the next time the Fed's going to raise interest rates will be in December. So for the Fed raising interest rates right now from 1.25% to 1.5%. And so this is Janet Yellen's last hurrah right here, her raising interest rates. And I said on last week's show, I'm like, there is a chance that the Fed could raise interest rates by 0.5% all at one time instead of this, a quarter point at a time sort of thing. And all this would get into that narrative I've talked about with Janet Yellen and her legacy. But still, even with the Fed only raising it 0.25%, everything is still intact. But I just thought as she's out the door, she'd be a little bit more aggressive. That would, kind of put that exclamation point on her legacy. But she didn't do that. So let's get to this. And I actually have some paragraphs here from the FOMC statement. I don't know. Maybe I'll just kind of read it just so you guys kind of know exactly what the hell they were saying before I start interjecting what I had to say, and just kind of give you a feel for what the Fed is thinking and the voting members of the FOMC. And now keep in mind here, everybody on the FOMC committee here who voted to raise interest rates, everybody but two members did not support raising interest rates. But one of the people who supported raising interest rates along with Janet Yellen is the upcoming Federal Reserve Chairman, Jerome Powell, or Jay Powell, whatever you want to call him. So they're talking about here, inflation on a 12-month basis is expected to remain somewhat below 2% in the near term, but to stabilize around the committee's 2% objective over the medium term. Near-term risks to the economic outlook appear roughly balanced, but the committee is monitoring inflation developments closely. Okay, then they're talking about how they raised interest rates from 1.25% to 1.5%, and the stance of monetary policy remains accommodative, thereby supporting strong labor market conditions and a sustained return to 2% inflation. Okay, yeah, throughout their statement, they're always emphasizing this 2% inflation rate, which, hell, for the last few years, the Fed is all about that. They're all trying to, the Federal Reserve, they're struggling to get that 2% inflation rate. Oh, it's so hard to do. And then I'll just read this. This is the last paragraph here that I want to read from the FOMC statement. In determining the timing and size of future adjustments to the target range for the federal funds rate, the committee will assess realized and expected economic conditions relative to its objectives of maximum employment and 2% inflation. This assessment will take into account a wide range of information, including measures of labor market conditions, indicators of inflation pressures, and inflation expectations, and readings on financial and international developments. The committee will carefully monitor actual and expected inflation developments relative to its symmetric inflation goal. The committee expects that economic conditions will evolve in a manner that will warrant gradual increases in the federal funds rate. The federal funds rate is likely to remain for some time below levels that are expected to prevail in the longer run. I can't tell you guys, when I'm reading this is the same crap I hear over and over. Yeah, stuff's transitory, but rates are expected to remain below the levels that are expected to prevail in the longer run. All this sort of gobbledygook BS. This is all we get from the Fed. Okay? Yeah, so what they said there. Okay, yeah, they're carefully monitoring inflation and the inflationary pressures in the economy. And then they're pointing out, okay, look, coming here in 2018, yes, as the economic conditions warrant, we will gradually raise interest rates just as we have been doing And just in 2017 alone, the Federal Reserve did raise interest rates 3 times. And so actually, Janet Yellen, under her term, her 4-year term, she has raised interest rates 5 times. And if you go back before Yellen, you have Bernanke, who served 2 terms. You know, the economic crisis in 2008, the housing crisis, Ben Bernanke never raised interest rates from there. And so Janet Yellen was the first one since that crisis to raise interest rates, and she's raised it 5 times, and the 5th time just came here last week. But when Ben Bernanke was Fed chairman, I've talked on episodes about this, how I knew he was bluffing, and it's all about the forward guidance, and the Fed's trying to use in, hey, if we can just talk about like we're going to raise interest rates, we can have the effect like interest rates actually have been risen without them actually being raised, that sort of thing, just because the markets are always forward-looking and so forth. So they were trying to take advantage of that. But then eventually, when people, it's the Lucy and Charlie Brown and the football sort of idea, which I know Peter Schiff, he really likes to use that analogy, which is a pretty good analogy. Every time Charlie Brown goes to kick the football, Lucy's like, oh yeah, I'm going to hold it this time. I'm not going to pull it away from you. And then as Charlie Brown goes to kick the football, she pulls it away yet again. Well, that's what Ben Bernanke did as Fed chairman. He never raised interest rates, but he sure as hell talked about it. But Janet Yellen, she actually did raise interest rates. And then now we have Jerome Powell, who will be the next Fed chairman, who will be coming in the first part of February here. And as I explained in last week's show, and I think the one before that, how I see Jerome Powell as he's going to start off his term, he's going to be a Janet Yellen 2.0. He'll continue what she's doing. He'll probably raise interest rates a few times. And then eventually he's going to morph into a Bernanke. He's not going to raise interest rates. He'll start lowering interest rates. He's going to bring back QE, all that sort of stuff. So that's how he's going to make that's how he's going to morph into a Bernanke. So it's going to be quite interesting to watch all this. Of course, this is me just speculating on all this, but from what I see with everything out there and how the economy is not actually as strong as what people at the Fed really do believe, I definitely think it's pretty probable of what I think is going to happen. And of course, as the Federal Reserve is, pointing out, they're raising interest rates because of the strength in the economy and all that. So right now they're pointing out, hey, look, we have unemployment levels are the lowest they've been since the year 2000. So that's, the strongest, or I should say, that's the lowest unemployment rate we've had in 17 years. You see growth in GDP picking up. You see inflation remaining relatively tame. It's not going over that 2% level that they always talk about. And then we see the Fed, they've actually bumped up their expectations for GDP growth for this next year compared to what they thought. Right now, the Federal Reserve is thinking that the economy is going to expand at 2.5%. And in their previous estimates were at 2.1%. So they've ticked that up. And so they're taking all this into consideration. They're like, hey, yeah, the economy is ready for these higher interest rates. We want to make sure we stay ahead of the inflation. But what's so interesting here is Janet Yellen's been bamboozled and she's just confused as hell. She doesn't get why inflation hasn't gone above that 2% level or gotten right at it yet. Because, Janet Yellen, from her little Keynesian little spectacles she's got on, she's looking at, we have a low unemployment rate, so there's not much slack in the labor market. So really, this inflation rate should be ticking up. It shouldn't be staying down. So Janet Yellen's confused as hell. Well, I guess it doesn't matter now because she's going to be out of here in a month. I did find this interesting too, where Janet Yellen, I'm pulling up from a Forbes article here by Robert Lesner, where the title of his article is Janet Yellen leaves us with Goldilocks economy, pointing out, things aren't too bad, just talking about how the growth is and so forth. And he says this at the very end of it. On markets, Yellen suggested that just because they are high doesn't necessarily mean they are overvalued. Asset values are elevated at the high end of the historical levels, but that doesn't necessarily mean they are overvalued. Higher valuations are supported by lower interest rates, nor does she think a sharp decline in stock prices would not be a severe risk to the economy. A very rosy view indeed. Okay, so I don't know. I don't like how he kept using nor and all these double negatives and all that. But look, Janet Yellen, this This all gets back to what I was saying. And actually, I want to go further here with the article from the Washington Post. I won't just completely go off here. Okay, but here's Janet Yellen saying that, okay, yes, the stock market, it's at high levels, but hey, this doesn't mean it's in a bubble. It's not in a bubble. These asset values are not overvalued. Because if you look at the low interest rates, it all makes sense. So that's what Janet Yellen's pointing out. Hey, everything's fine. I didn't create some bubble. So she's keeping herself away from that blame. Because she's out the door, remember that. And now let's just continue on here. Because I'm going to tie this again back in with what I've talked about with Janet Yellen and her legacy and what she's been doing and what she talked about at Jackson Hole this last year. This all is right in track with all these articles I've got here. And this is actually the last one I want to refer to. So this is Washington Post. I've got a few paragraphs here. She's talking about Bitcoin, a few different things. So let's just start here with the first one. Okay. Powell has hinted, so Powell is the incoming Fed chair. That's how he starts off this article here. Powell has hinted, however, that he is open to some reforms to bank regulations, telling senators during his confirmation hearing that he thinks the current regulations on Wall Street are tough enough. But Yellen tried to tame expectations that Powell would bring a big transformation in regulation, saying Wednesday that, quote, all of my colleagues, quote, have expressed a strong commitment to keep in place the core reforms that have produced a strong financial system. The one regret Yellen has about her tenure is that inflation has remained too low. She said the Fed projects inflation to finish the year at 1.7%. I want to see it move up to 2%, she said. There's work undone there. Okay, so Janet Yellen, again, she's tying things back in. So you have Jerome Powell, this guy, he's saying, well, look, we definitely are regulating the financial industry enough as it is. If anything, we probably should remove some. Janet Yellen saying, no, buddy. Even though, Powell, I think you're a kook that you want to unwind regulations. I think the team we have in place here, but the Board of Governors here, I think they'll keep you in place. But who knows when you got Trump there? She's thinking that they're going to commit to keeping the financial system strong with all the regulations that they have. So again, she's protecting herself and saying everything is fine. The financial system is strong because of all the regulations we have in place now. We have the incoming Federal Reserve Chairman, Jerome Powell, saying he's more about the deregulation thing. So this is why, look at Janet Yellen talking about at Jackson Hole, not talking about monetary policy at all, but instead talked about regulations and the problem with deregulations in the economy. That's all she talked about. And here she's tying this back in, and it's all going to relate to the incoming Federal Reserve Chairman. Okay, and then obviously she wants to see inflation move up to 2%, so there's work to be done there that the Fed still needs to focus on. Okay, we got to get inflation up. And then continuing on here, and this is what also is interesting, where Janet Yellen at this conference, she was asked about Bitcoin. And so Yellen responded, and she warned Americans to be careful before buying the asset, which can have, these wild price swings, which we've seen. And she said this about Bitcoin, quote, it is not a stable source of value and doesn't constitute legal tender, end quote, she said. It is, quote, a highly speculative asset, end quote. Okay, so I guess with everything she said about Bitcoin, yeah, it's all true, okay? With Bitcoin moving up and down like a freaking crazy roller coaster, I had to stop myself there. Is it a really good stable source of value? No, there's nothing but stability with Bitcoin. Does it constitute legal tender? No. Unfortunately, because of the government saying that the dollar, that some fiat currency is legal tender, there should not be any legal tender laws at all. So everything she said there, yeah, she's right. It's a highly speculative asset. Yes, it is. So for any of you who are thinking about getting into Bitcoin for the first time right now, from my perspective, I think you're crazy. Now, of course, I have to keep backing myself up here saying, am I saying that Bitcoin is at a peak, that it's going to be going down from here, that it's peaked out? That's not what I'm saying. Bitcoin probably will go much higher. Who knows? 40, 50,000, I don't know. But it's going to have to drop to a level to shake off all these new investors. It's how any market works. Any of you who out there who follow commodities, currencies, it's how they work. And I'm guessing a lot of these people who are in Bitcoin, they've never experienced any of this before. That's just kind of what I've gathered from this. So here's Janet Yellen talking about Bitcoin. And then also we do need to keep in mind, and they refer to this in the article too. So as we have interest rates rising, people are basically, what this article is saying here is that people who have credit card debt, they're going to impact the rise in interest rates the quickest. Because right now the Federal Reserve is predicting 3 rate hikes in 2018. And so based on that, they're saying that this is going to add $1.46 billion in finance charges for people with credit card debt in 2018 alone. So obviously these people who are already living paycheck to paycheck, actually worse than that because they're in debt, they're adding more and more to their credit cards and they're just making minimum payments. That is not a good place to be. And that is really what's sad, is how many Americans out there have overextended themselves. It's like, come on, guys, don't do that. Be smart with your money. Don't live a life in debt. Don't be a slave to debt. You don't want that. Especially when you're like a libertarian-minded person in general, you have the mindset, right, if you're like me, that you can control everything in your life. Yes, bad things happen, but I always try to look back, okay, what did I do to get myself in this situation, right? Always take responsibility for it. Life is hard enough as it is. To be a slave to debt on top of it, to add that stress to be in debt, oh my gosh, I can't imagine all what people put themselves through because of that. But it's their fault. They've gotten themselves in that predicament. So here we have, in this episode here, as I'm concluding, we got Janet Yellen, her last FOMC statement, the last time she's going to be there, yes, raising interest rates. She's out the door. She'll be kind of behind the scenes before she leaves here in first part of February, and we have Jerome Powell step in. So Janet Yellen, she got by the skin of her teeth. We did not have any major crisis during her tenure, which a lot of us out here were thinking, okay, that looks like there's probably a good chance the 4 years that she's chairwoman, something's going to happen. All this money printing, all this papering over debt that we've done, and all we do is we keep adding to the debt year after year. We're over $20 trillion in debt. I mean, this is insane. And it's from the Austrian perspective that the longer things go without a correction, right now, the stock market, we're in one of the longest bull markets in history. Stock market just keeps going up. Hell, I think the stock market's up, I think it's over 5,000 points in just 1 year, which is the most it's ever done. I mean, the levels that things are at, there's bubbles all over the place. Now, if you can see the bubbles, you can profit handsomely from this. But most people can't see the bubbles. Most people who like to talk about bubbles, they still don't see the bubbles, but they think they do. It's like with anything. It's a lot easier to criticize someone else than to reflect back and kind of look at yourself, sort of thing, right? So here we are, my friends. We are going to be facing an economic crisis like we've never seen before. Will it happen in 2018? 2019? Will it somehow get pushed to 2020? I don't know. But it could happen at any time. So it's all about protecting yourself and realizing that, hey, we've gotten by this far. Hopefully you've taken advantage of these last few years and have made your portfolio stronger. You've built up more savings, or you've been diversifying in ways that you think will help you benefit from an economic crisis. Having some insurance with, physical gold and silver coins, investing in things of value. Maybe you invested in some real estate in 2009 when it hit a low, right after a crisis. That's when you want to invest in things, when things are beaten up, when nobody wants to touch it. Now that I think about it, let's see, what is beat to hell right now that nobody wants to talk about, and people will laugh at you if you mention it? Gold and silver. People will think you're a joke if you're talking about investing in gold and silver. What, Justin? Come on. You're not going to make money in gold and silver. The future is Bitcoin. That, my friends, that tells you gold and silver is it's a beautiful place to put some money right now. That's at least what I've done, and I'm going to continue to do. I see it. There's so much value in it. Anyway, guys, we'll just leave this here for today's show. And if you guys want to catch up on old episodes, just go to justinmoreshow.com, more spelled M-O-H-R. You can also, this is the last few days here before Christmas. Buy those last minute gifts from Amazon. Buy through my little link there. Click on the banner on my website. It takes you to Amazon. Costs you nothing extra. I get a small commission back. Please, guys, do that. Great way to help me out. You can donate to my show. You can join Tom Wood's Liberty Classroom through my site. All ways to help me out. And it's not costing you anything extra besides you're paying to be part of Tom Wood's Liberty Classroom, which he's got top-notch professors over there teaching you about all sorts of topics with U.S. history, world history, logic, the history of economic thought, taught by Robert Murphy that I've had on this show. All sorts of great stuff, guys. Do yourself a favor and get that for you or for a loved one, or get that for somebody who probably needs to learn a little bit more about it, which would be most of us. There's always more you can learn. Anyway, guys, I thank you guys so much for being here. Merry Christmas. Happy New Year. And I will talk with all you guys next week, and I'm looking forward to it. This is Justin Moore, signing off.